Good morning, team. Mark Treadway here with this week's actionable insights after a truly eventful weekend across global commodities. Let's begin with oil. Prices have pulled back following the resumption of loadings at Russia's Novorossiysk after last week's Ukrainian drone attack, erasing Friday's gains. Brent is at $63, WTI at $59. The risk of further disruption lingers as repeated strikes on Russian refining and ramping US sanctions trigger uncertainty. OPEC faces a delicate balancing act with oversupply concerns. Their moves this week could force sudden volatility. If you are trading in crude, consider tightening stop levels and watch for short-term spikes around Black Sea headlines. Timing is everything when surge risk and oversupply collide. In grains, corn pushed modestly higher this week with output in Mexico and the EU. Yet the real story is China, which continues to produce near record volumes and slow walk US soybean imports, letting Brazilian exports fill the gap. US farm prices nudged to $4, but beware. Tariff shifts in the US and muted Chinese demand are changing flow patterns fast. If you're active in grains, spread long US corn against short soybeans and watch for South American export signals. Brazil will set much of the pace in Q1. For metals, gold is softer after last week's rebound, now declining as the market awaits new US data. Nickel continues its downward slide, pressured by a stronger US dollar and hawkish Fed signals, while copper is holding above $5 after the end of the US government shutdown boosted market sentiment. But weak near-term demand and cautious Chinese credit growth signal volatility. For metals, scale into copper on dips for a possible late Q4 rebound. Avoid leveraged nickel longs and hedge gold exposure with short out-of-the-money calls until US macro data clears. Soft and agris, rapeseed oil and corn are leaders. Rapeseed oil up 3.5%, corn 0.8%, while cottonseed oil futures are off nearly 1% on poor demand. Lumber stays under pressure after steep tariffs and slow US construction. If you're trading agriculture or lumber products, focus trades on rapeseed spreads. Keep cottonseed short exposure intact and pivot to domestic lumber markets until US policy clarity improves. Geopolitically, the energy corridor in the Black Sea and a series of Iranian moves in the Gulf have cemented new price corridors, while the Swiss tariff deal with the US signals coming changes in agricultural exports. If your flow relies on logistics from Eurasia, think risk mitigation on Black Sea exposure and prioritize alternate routes. So that's what matters this week. Stay nimble, stay driven, and let ENTRADE ETRM help you power your risk and logistics.